What is up, YouTube? What is up, guys? The Composer Trader here, and welcome back to another post-trading analysis video. And we had an amazing trading day in the TCT trading community. So we got lots of trades to go over about. So let's just jump straight into it. We took a trade on Caspa, Solana, and Ton. Okay. So in front of us, we can see the Caspa trade with the trade that we took. Absolutely beauty of a short setup. So let's just jump straight into the details as to how I managed to catch this short. So always, going from high time frame to low time frame, kind of get some context as to where price is on the chart. We had a pretty aggressive expansion towards the upside after coming down into that range discount setting. And from there, we had a very aggressive expansion up, and we swept some of this buy-side liquidity. Okay, so price was kind of coming down in this. It's not the most beautiful curve, but it's some sort of a curve where all these highs are lower highs, basically meaning that there's a lot of buy-side liquidity above those highs, and price comes up in a very aggressive way. And obviously, when you're coming up very aggressively, you can expect some sort of a cool-off, a retracement, before continuing the trend or reversing back down. So not only that, if we pull our volume profile, you came in that upper section of the range, very close to the volume area high at the moment. Either way, you are back in premium pricing, because if we turn on the equilibrium of the range, you can see that you're above that EQ, meaning you are in premium pricing, sweeping some buy side liquidity. So it's not a weird place to look for a short for a potential rejection down. Okay, now if we zoom in, what we can see right here on the kind of like the 45 minute is better, 45 to 30 minute, what we can see is that coming into that buy side liquidity high, price is making higher lows and higher highs, just like this. Okay, now this move up, instead of it being market structure, you need to look at the difference between this first market structure pool and then what's supposed to be a range. Right here, you can see the sell to buy, breaking structure aggressively, sweeping that buy side liquidity high. And then from there, price takes a long time to put in a higher high, which is barely a higher high. Now, when we're trending up, we pull our range from top to bottom. And to confirm that it's not a market structure break, you can turn on your DL2 from the mentorship. And you can see that that break is inside of your deviation limit. And therefore, this is a deviation and not particularly a good break of structure. So from there, we have our range high, we have our range low, and this is a deviation number one. Okay, so after our deviation one, we kind of extend our range high to the deviation high, and we look for potential distribution schematics, either a model 2 distribution or a model 1. Now, what really caught my attention and caught my eye here as to why I like this setup so much is the way that price was coming up. You were leaving this beautiful trend line of sell side liquidity. Like, it's absolutely beautiful when you can connect 3 lows on a trend line, and in the meantime, you have all these internal lows also building up. So we have this low right here that can be connected to this low and that low, making your sell side liquidity trend line. But also locally, all these higher lows are just stacking up, creating lots and lots of sell side liquidity, making for a good return to zone. And the people that have watched the mentorship and also the private lectures in the Discord, they know that the return to zone is something I put a lot of importance on when trading. Okay, so we had that deviation one, we had this beautiful trend line liquidity or trend line sell side liquidity. And now it's just a matter of, are we going to trade a model 1 distribution if we get the confirmations, or is it going to be a model 2? So looking at where it could potentially be that extreme supply, it wasn't particularly that obvious from a third tap perspective. If you're really gonna, go down on the lower time frames, technically speaking, from a supply standpoint, this last buy to sell is kind of like wick supply, because it's the only supply there is. It truly indicates that pivot point. So sellers must have definitely stepped in there. And then that will be your extreme supply POI. or, you know, you can kind of use these local highs right here as your extreme liquidity, okay? Just like that. So the moment price came into this area, that was kind of your confirmation of like, hey, this could be a potential third tap of the Model 2 distribution schematic. Now, I do have to say, guys, that this third tap came extremely close to your second tap, kind of putting in equal highs, which is less good. Okay, it is less good. You preferably want to have somewhat of a distance, otherwise it kind of becomes equal highs, and you know those can get taken. But what interested me the most is that the fact that the way you came into that third tap, you kind of had yourself an own little range going on. So locally, you also were making higher lows and higher highs just like this. And then in here, you had another TCT Model 1 distribution where your third tap of the local distribution right here with your tab 1, let's make that blue, your tab 1, your tab 2, and your tab 3, that third tab of the local distribution is also the third tab of the bigger distribution schematic. And that can make for extremely high probability short setups, but also very high risk to reward setups. So I was kind of looking at this. The problem was that you had no structure. Okay, you had no structure in this move up that could be broken back to bearish to confirm this local distribution. So we couldn't really get the refined entry. But I want to bring you guys to the Discord server right here. This is my channel in the VIP section from the TCT trading community. And you can see this morning at 9:42 a.m., I was talking about this potential short setup, you know, Caspa potential short setup, taking that extreme liquidity point for the Model 2 distribution, and then taking it all the way down towards the range low. So I was preparing the VIP members of like, hey, we can catch a potential distribution short here. And it ended up being a bit of a more extended distribution where we had this local distribution inside of that third tap from the bigger distribution. Now, we couldn't get a local entry right here, so we simply had to wait for a market structure break, which happened right here, okay? So the moment we started breaking that low, that kind of confirmed that this bigger Model 2 distribution is in play. And then you can kind of catch and extend that trend line, and you can see that, you know, price is breaking market structure here and is closing below that beautiful liquidity trend line. And that's just, you know, whenever you see this, I like to post the toilet on the chart, and that basically means that price is going to flush down. Okay, it's going to flush down. So that is also exactly where we entered with the TCT trading community, and then we took it down towards that range low. I kind of let alert. I kind of let a position. I kind of let some of my position run in case we were going to see some further follow through. But yeah, I took out 75% at this range low for around a 2% gain, and then left 25% run for lower, which we're currently still in. I took a bit more profits here at the lows and at the back test of this range demand right here. So it was just an absolutely beauty of a trade, beauty of a Model 2 distribution, where the third tab had its own local little distribution, and you had this beautiful trend line that was leaving no support behind for price to bounce off. And that's basically what the return to zone means, right? You want price to come down as easily as possible to your zone, which is the range low. And if you just have trendline liquidity, that is the case. So absolutely beauty of a Caspa short. I also let the people know in my channel that right here, all triggered given this morning. You can see we were talking about entering right on that break at 2:31 p.m. And we were also entering the other three trades that we're about to head into right now on Solana. Okay, so beautiful trade, around 2.5% gain. Absolutely beautiful. Going into Solana, Solana was a bit trickier. I'm currently still in Solana. However, I have taken profits at these lows. Stop loss has been put to entry. So The trade is completely chilling. But what I was viewing for Solana, also zooming out as always, we were breaking out of this macro accumulation range that we were in for hundreds of days, and we're kind of approaching that all-time high territorium. So it is riskier to short, right? It's definitely riskier to short. However, you can argue that you can catch a local distribution trade in here, where the purpose of the distribution is just to backtest this structure demand for the higher low for the higher high. So if you get the confirmations, you can still try and take the short. However, I would wait for only high probability schematics. I wouldn't just trade any distribution up here in almost price discovery. It would be a high probability schematic, which is something that we got. Okay, that's definitely something that we got. Now, going into Solana, we actually had to take one tiny L before getting the W. So what do I mean with that? Now, we were going higher, making higher lows and higher highs right here. Higher lows and higher highs. And from there, I pulled my range from top to bottom. And then from the high time frame perspective, I called this my tap 1. Let's make that red. And then this whole move is just one deviation, one peak up, one peak down. And then I called that my tap 2 from a potential distribution standpoint. Now, on the lower time frame, like the 45, this kind of already looks like a 1, a 2, and a 3. I just don't particularly like the way that tap 2 and tap 3 were formed, because you clearly have price moving up to tap 2, and then you kind of have like your own little range here where this pullback after tap 2 barely peaked back inside and immediately went higher. So I didn't really like to use that Model 1, but it is extra confluence where, you know, on the low time frame, your Model 1 can flow over in the Model 2, and on the high time frame, you just have a Model 2. Like whenever you can match distributions within distributions, that's when you know market makers are truly manipulating price, deviating the highs, leaving the lows intact for that flush down. Okay, so on Solana, I was watching for potential Model 2 distribution, because the way that we were coming up in the morning, right? The way that we were coming up, we also on Solana were leaving this beautiful liquidity curve of just sell side liquidity, which is very easy for prices to sweep in one go. Okay, currently we're a bit struggling after sweeping some lows, but in general, you get very easy sweeps down when price is curving up like this. So I was just identifying, hey, where are my POIs, right? Where are my POIs for a potential Model 2 distribution? I wasn't looking for a Model 1 because on the lower time frame, we already kind of had a Model 1. So I really wanted that Model 1 to stay intact on the lower time frame and to go into a higher time frame Model 2. So we had two POIs. We had this 50-minute supply zone, and that's from the supply perspective, but we also had this first high time frame lower high for the lower low, which makes it your extreme liquidity point, right? And in order to have a valid third tap, price on the third tap needs to sweep either extreme liquidity, which will be sweeping that high, or mitigate this extreme supply. It can also do both, but it needs to at least do one before you can even talk about a valid distribution. And that is exactly why we took a tiny loss before getting a massive W. Because as you can see right here, price took this extreme liquidity point, right? Price took that extreme liquidity point, and then it broke structure back to bearish right here. So after sweeping that liquidity point, coming into that liquidity point, you had higher lows and higher highs just like this, and then you broke structure back to bearish. Now, the problem with this market structure break is that right below it, right here, you had very good looking demand, okay? It's just this local, it's like this sneaky local demand that's backed by that local inefficiency, making it valid structure demand, which is really tricky because you see this massive liquidity curve, but just up there, there's still demand. So what I wanted to see is I wanted to see this demand failing by closing deeper candles inside and then getting the pullback. And if I see signs of weakness on this pullback, meaning between this low and that high, I see market structure breaking back to bearish like this, that's when I'll enter on the lower high and I'll short it back down all the way to like the 230 range. The problem was we never got that, right? We never got that. So on the break, in case we just got a massive flush down, I already entered a 0.5 risk position right here with my stop loss above that high, targeting all the way down towards this range low for around a 5.3 risk to reward. And I was going to add to the position if I saw signs of weakness on the bounce. But, as you can see, we broke structure back to bullish right here, never getting any signs of weakness. And then we got stopped out of the position. But as I always tell to all the TCT members, whenever you have such a high probability schematic building up and you get a confirmation to short and you lose that short, and you lose that trade, don't just walk away from it. See why did you lose it? Was there a reason to go higher? Was there a reason to manipulate more before actually playing out? Okay, especially this only applies when you're watching a very high probability schematic. Like they're not making price up curve, like they're not making price curve up like this for just no reason, right? Some liquidity needs to be swept. So maybe your entry right here was wrong, but you can re-enter later on with again high conviction and make even way more than your 0.5% loss right here. So going to the Discord server, you can see right here that we pre-planned Sol right in here. So this morning we pre-planned Sol, sweeping that extreme liquidity, breaking structure and entering. And then right here I was talking about, hey, this entry is currently triggered. You can see right here the entry was triggered, but that trade ended up not working out. You can see right here, trade ended up not working out. Well, we went through our stop loss, 0.5% loss, 0.6% with the fees. But you can see here, if you took this setup, there's absolutely nothing to worry about. Keep the losses small and the wins big. And then I continue to say, if I see something like this, I'm running the short back. We mitigated extreme supply now. So you can see that mindset that, hey, we're running the short back. The initial trade setup fell, but the idea is still the same, right? So I wanted to see a break of structure, signs of weakness, enter more. And that's exactly what we did, right? So we got that break of structure right here, coming into that extreme supply, which price ended up wanting to sweep, making higher lows and higher highs just like this. And then right here, you can see that we initially wicked that market structure low before breaking structure right here. Boom, broke structure. That's where my entry was. Put that stop loss above the high. And then the proper TP1 was right below these lows at demand. Boom. Boom. And the reason why I had a TP there was because of a volume area low. And yeah. So right here, if there was any form of demand on the low time frame, it was right here, getting overlapped with that volume area low. So TP1 was initially 33%, but it ended up taking more after this pullback. Stop loss got put back to entry and currently made way more than that 0.5% loss. We're up around 1.5% realized, and I still have some unrealized. Just because the technical target of the distribution is this range low. So I do hope we end up coming down there. But for now, the only expectation that we should have is to stick to the plan, right? That was our TP1. Stop loss is to entry now. Risk-free trade. At this point in time, Caspa already hit its target on this initial move down. The Caspa trade already hit its take profit of 2+%. So we were completely chilling, okay? We were completely chilling. So again, it's a Model 2 distribution with just an amazing return to zone, which are the highest probability trades, okay? Break of structure back inside that volume profile, adding all these high probability variables to the chart. The people that are in the Discord know what those are, how to structure them, how to order them, to make high probability schematics, to know when to double down, to know when to back off as well. Seeing this right here with that demand there, the fact that we know we can get that bounce there, and in case we do flush straight through it, you want to have a position open. Hence, we enter with a 0.5% risk. But besides that, you need to see signs of weakness on that bounce, and we didn't get it. But that's the crucial point. You needed to know that, you need to be aware of the demand, know that that bounce is probably going to take place, especially if you break structure aggressively, and then that will prevent you from just absolutely degen entry on that first break and then lose a lot, you know? We only lost 0.6% and we made in this trade already 1.5% with like 2% still in unrealized profits while making 2.5% on Caspa. So you're well up over 6% on the day, guys. And that's not the only thing, because lastly, we also got Mr. Ton. Okay, so I was also posting about Ton in the Discord right here. Initially, I was like, in the morning, I said, hey, this would be an extremely high probability setup on Ton, and that was about sweeping that initial first market structure high that was created with this amazing return to zone, kind of having your Model 1 flow over in a Model 2. But then I said, technically speaking, the current tap is already valid from a Model 2 perspective because we did have some supply in there, and that was already extreme supply. So price didn't particularly have to sweep that extreme liquidity point, especially because you already had 3 taps at the high. So then I posted about did setup with the return to zone, and what that basically was is I missed the initial entry. So talking about that supply on the chart, you can see that supply was basically on a lower time frame. This higher low for the higher high, like this, that broke structure aggressively, leaving an inefficiency right here. And that's where price ended up coming back into, and then you broke structure. So the initial entry from a Model 2 distribution perspective would be like this. This would be your entry. However, for me, that's 3 a.m. So I wasn't awake for that entry. Okay, I wasn't awake for it. However, I was awake around 7 a.m. And what I'm seeing at 7 is that price is right here making lower highs and lower lows, right? Lower high, lower low. And then I'm kind of waiting for signs of weakness on this local move up, just like this. And what I'm seeing right here is that price broke structure back to bearish. So I was watching this orange structure right here, and we tried to break it back to bearish initially, but we wicked it, and then we had that close below. So right here is where I jumped back in. Now, I did keep my stop loss above that high to be safe. Okay, I did keep my stop loss above that high to be safe. So that was exactly my entry. Stop loss goes above that high, and then we were targeting the range low. I was more of a fan of targeting this low. I was more a fan of targeting this low and kind of looking at it from a Model 2 distribution perspective. And even the nicer low was this low right here, and that's because these lows, to me, they're not really liquidity lows, like, oh, they need to get taken out, because this low swept liquidity very aggressively, and this low swept all this liquidity very aggressively. These lows didn't do that much, right? Besides just having an accumulation. So because these lows swept liquidity, they aren't really liquidity. That's how I'm viewing it. So preferably, I'm targeting the trade right here. It's already a 5.7 risk to reward, which is just absolutely stupid, right? That's absolutely amazing. So we're currently seeing price following the plan. We kind of got acceptance back inside our volume profile as well. I think this supply zone is kind of overlapping with our volume area high, currently bouncing from the POC. So preferably, you want to see a bounce here. You want to see supply getting respected, and then you want to see that follow through down, sweeping all these lows here. Okay, that's for now kind of the plan. However, I have put my stop loss at break even. Now that I'm saying this, it is in the middle of that supply zone, but preferably, I don't want price to break back inside just to break back outside again and then to reject. Like, I don't like that. Why break back inside to immediately break back outside again? Now, the only issue I'm having with Ton is that it is coming down, leaving all this buy side liquidity above. So even though we do have supply, you can clearly see that all these highs are curving down, right? All these highs are curving down just like this. So it truly depends a bit on Bitcoin, right? It truly depends a bit on Bitcoin if it's going to have more follow through towards the downside, because that's when Ton will just, follow it with it. But overall, as of now, we're in profits. I haven't taken a single take profit here on Ton. I just de-risk my position by moving my stop loss. But I'm going to reassess what's going to happen this upcoming hour. Afterwards, I'm going to bet. And based on that, I'll probably, if we're still hovering around in this area, I'll probably just keep my stop loss right below that supply zone. Because if we go that high, we're probably just going to take that high, right? And see how it develops. But the last thing I wanted to mention is that all these setups were developing when Bitcoin wasn't particularly showing signs of weakness. So I want people to understand that correlation. At the point of entry, for example, on Sol here, it was 1348, okay? 1348. In the morning, I was already talking about the distributions. If we go to the time right here, 1348, like Bitcoin was just moving up. It truly wasn't doing anything special. It was just moving up in the range. Yes, we were at premium pricing. Yes, we were sweeping some buy-side liquidity, but that was kind of it, But I want you guys to understand that when your altcoins are looking this good and they're forming such mid to high time frame, high probability short setups, you can kind of have the correlation the other way around, where if Bitcoin is moving towards a potential resistance zone, you can confirm that resistance POI by looking at your altcoins that are looking very distributive. Because that's also what I said here. Like today was like, we, by the way, don't particularly give signals. You can say trigger, this is signal, but it's more of an educational server. I tried to keep it as educational as possible, but obviously you guys are also trading with me so that you guys can actually benefit from, can actually make money while learning how to trade, right? Everything is shared in here the entire day. But I want you guys to pay attention to what I said at 1:43 p.m. Wouldn't be surprised to see Bitcoin move up, deviate your range high, or just an aggressive buy to sell while going up that will allow your coins that are looking distributive to complete their schematics. Very typical behavior. And then I was talking about how all these three trades were triggered. And that's exactly what happened, right? It's literally exactly what happened. Bitcoin got that buy to sell. Literally, you got the buy, you got the sell. And that was enough for a lot of their altcoins to complete their distribution schematics, like Caspa and Sol is currently, trying to do its job, trying to finish it, but seeing some relief rallies now. But you don't form these high probability schematics on the higher time frame for no reason. Like this was a 2-hour schematic, a 2-hour range, such a clean return to zone. It's you can actually use Solana to kind of predict what Bitcoin is going to do instead of the other way around, which is kind of a new narrative that many people do not understand yet, because they will not take the altcoin short because Bitcoin isn't looking bearish yet, while sometimes you can use that correlation the other way around. So we had an amazing trade on Sol, which is de-risked and 1.5% realized, while realizing over 2.5% on Caspa with still a position up and running. And then Ton is also still up and running. That stop loss, if I keep it above that supply and it gets triggered, I only lose fees. That's like a 0.2% loss. So overall, we're well up on the day. It's around a 5% gain. Yeah, around a 5% gain, where 4% is a bit more. It's around a 6% gain, where 4% is realized, 2% is up and running, or even more. I need to check my trading exchange. I'm going to check it and put it in the title for you guys. But either way, an amazing trading day with the TCT trading community. If you want to join the community and learn how to trade, only join it if you're actually willing to learn how to trade. Okay, we're not going to be spoon feeding you guys. We have live streams every single day during London, during New York, and then actually tomorrow is my educational session where people can ask me all the questions regarding course content, crypto investment, portfolio rotation plays, like you name it, mentorship content. It's all in there. So that's actually getting hosted tomorrow. But either way, we have everything that you need in order to succeed in trading and investing. You know, we have meme coin sexies, we have Forex trading, because I almost always trade Forex live on New York Open as well, which is just absolutely amazing. So everything is in there. You can go to tcttrading.com. The link is in the bio of this video. You can click on join VIP Discord. You can see the benefits here, kind of scroll down, get a feeling for what you can expect. And obviously, if you are not aware, I have a free mentorship where I go about, or where I talk about all the concepts that I'm using in these videos in a structured step-by-step process with introductions to TradingView, and then market structure, liquidity concepts, supply and demand. Like, it's all here, guys. I want you to succeed in trading, okay? So if you want to get a feel first for my style of trading, either way, if you made it till the end and you like my style of TA and you like my style of teaching, then, you know, study the mentorship, and then I would highly suggest you go and join the TCT trading community, because you'll see me trade live every day, and that's truly the easiest way to learn the fastest, when you see how I act and behave in a live trading environment. So I love all of you for watching. Make sure to drop a like, a comment if you have any questions or just appreciate the video. I love all of you, and I'll see you in the next one. Peace out, guys.